Good morning and welcome to Position Sizing, my take on the markets. It's Wednesday, October 13, 2010, and before we begin, I caution you to invest at your own risk. I don't share in your profits, so I don't share in your losses. Today I want to talk about one technique that I use during trending markets to get a sense of when the cycle might turn. The money flow index is an indicator derived by comparing the volume on days where the typical price of a stock goes up with the volume on days where the typical price of a stock goes down. The typical price on any given day is simply the high plus the low plus the close divided by 3. The 14-day money flow index is shown at the bottom of this chart while the S&P is shown at the top. As you can see, I've got the first 5 months of 2010 shown above. So it's been my experience that sometimes the money flow index will peak right in the middle of a strong move and start to pull back while the price continues its trend. So for example, you'll notice that earlier this year the money flow peaked on March the 17th and then started to decline while price continued to rise. This is divergence. Price dipped to 1045 intraday on February the 5th before rallying 20 points into the close. This was the start of the up move. If you started drawing your T on February the 5th and you put a center post where the money flow index peaked on March 17, you would have projected a top on exactly April 26. In other words, in this case, the money flow peaked exactly in the middle of this move. Now, you don't always see divergence between the money flow and price in strong moves. Furthermore, when you do see that divergence, money flow doesn't always split the middle exactly like it did earlier this year. But it happens often enough that it's something that I pay attention to. Here's another example from 2008. The down move started on August the 29th. Money flow bottomed on October the 10th, then showed divergence as price continued down, and using October 10th as a center post, you would have projected an end to the down move on November the 20th. We have a similar situation going on today. The August low closing price was 1047 on August 26th. On the 27th of August, price made a 7-week intraday low at 1039 before rallying 25 points into the close. It's pretty clear that the current up move started on August the 27th. The money flow index peaked on September the 21st. Using that peak as a center post projects an end to the current up move as of today, October 13. Now, there are no guarantees in life. This could be one of those times that the money flow T simply doesn't work. Furthermore, we have options expiration on Friday, as well as earnings season clouding the picture. But it's something I thought you might be interested in. That's it for today. Until next time, happy trading.